Let's look at some of the technicals in the market. Joining us now, Chris Verrone, Strategas Research Partners, Head of Technical and Macro Research. And says here, and I'll take your word for it, that you were talking about a correction earlier this month in April, and that was different. You guys at your shop, you can think whatever you want. You don't need to agree with Jason Trenner all the time, right? So you weren't looking for a correction long before April 2nd? Or?
Well, I think as we kind of moved through March and, the incredible strength to start the year, by the time you got to late March, early April, there were some weird things that were happening, right? We saw the move in yields. We saw dollar go along with it. You started to get this little streak of counter-cyclical leadership, right? The staples started to get some life breathed into them, the utilities as well. That just didn't feel right for a market that was up 10, 12, 15% year to date. And we kind of put out the watch your back tactical caution call. Now, I just don't want to get too cute with that call, because at the end of the day, the primary trend of this market is still up. And when you get 5, 6, 7% drawdowns in uptrends, you generally want to be a buyer when the oversold conditions start to present themselves. And I thought last week we started to see some of that, Joe. We had a surge in the number of stocks making one-month lows. When you start to get 50, 55, 60% of the index making a new low, you're generally in the ballpark of a good tradable bottom. So I think we're close. I don't know if yesterday or last Friday is going to be the low, but I think we're close enough in the context of a bull market to be putting risk back on here.
Because earlier this week, that was the consensus, I would say, that we were hearing, was that, look, we were expecting 5 to 10%, and now it looks like we've wrung out enough of the sentiment has turned bearish enough, and then, all of a sudden you get that GDP number combined with a hotter or rekindled inflation worries. And at one point we were down a lot yesterday. We came back quite a bit, but it shook people a lot. It looked like we could still be in a pullback mode. You think we're close to the end of the pullback mode?
I think we're at the end or near the end, and I just want to remember, corrections don't end on good news. They end on bad news, right? It's bad data that emboldens the bearishness out there, which is where the correction lows are often made. I thought something interesting happened last week. You had spot VIX begin to trade above the future contracts. That's a sign of stress. You began to see some stress in the put calls. I thought a lot of the survey data that we got this week was interesting. The bullishness has really come out of this market. So I think the sentiment story is coming together. And maybe what's gone unappreciated as this market has corrected, how well these financials have acted. I mean, the leadership from the bank stocks, the brokers, and not just domestically. The European banks have continued to chug along, even the Japanese banks. So there's a good streak of kind of financial leadership that's emerged out of this correction. And you always want to look to, in a corrective phase, what are the leadership clues that the market's offering? They tend to come out the other side as pretty potent. And I think financials and banks in particular check that box.
Especially after some of the angst is about rates staying higher for longer. Yeah. But that can help and hurt the financials.
I think it's banks.
Joe, I think it's less about the nominal level of rates. What's happening quietly is the curve steepening. And look at 2s, 10s. We've gone from, negative 45 to, just about negative 30, negative 28 right now. My suspicion is that's why banks and utilities are kind of working together here. That bear steepener, generally good for both groups.